Good morning, everybody in the UK, and good afternoon to all our colleagues in Southeast Asia and our listeners. Welcome to our UK-ABC Digital Export Series webinars, an extension of what we have been doing over the past years. And today's webinar is about successful growth in ASEAN. My name is Paul North from the UK-ASEAN Business Council, and I'm joined here by our events manager, Veronica, who has been behind organising today's event. Today we have two very special guests with us in the way of James Quay from Asia Market Entry. It's a Singapore-based organisation that assists UK tech companies to have a presence in the ASEAN region, alongside our colleague Victor Kayasev from Greenhouse Company, a technology platform providing professional services through a network of service providers. And Victor, although the organisation is a Singapore-based, Victor is in Indonesia. Before we start our presentations, just to let you know that you can send in at any time questions to our presenters through the question box in the lower right-hand corner of the webinar dashboard, and we will endeavour to answer those questions at the end of the presentations. If we do run out of time, we will certainly get back to you with an answer to your questions. So just to start a little bit about us as UK-ASEAN Business Council, I will quickly go through these first two slides because my colleagues will be talking a lot more about ASEAN and its opportunities there. But it is where the growth is, or it was where the growth is under the current situation. But the growth structure in the ASEAN markets is extremely strong, as you can see there by some of those figures. And it is predicted that after the current situation that we have, that it will be one of the regions, economic regions within the world that will bounce back very quickly and very strongly again. So where do we fit in as the UK-ASEAN Business Council? The UK-ASEAN Business Council is the leading UK-based organisation promoting trade and investment between the UK and ASEAN's dynamic markets. We were created out then by the UK Trade and Investment, now the Department for International Trade, as part of Britain's Open for Business strategy. We were a government organisation, but we are now a private standalone business council. We help UK companies of all sizes build new contacts, provide market insights, and raise the awareness of the vast commercial developments in what is undoubtedly one of the most exciting, vibrant, and fastest growing regions in the world. We also bring ASEAN to the UK through a sustained calendar of country briefings, targeted meetings, one-to-one clinics, and promotional events and webinars such as we are doing today. In addition, we signpost practical advice and guidance on how to do business in ASEAN and can provide access to a considerable network of useful contacts. Just to show you some of those, we are working closely with the UK and ASEAN governments, key partner organisations, including the British Chambers of Commerce in ASEAN, influential corporates, experienced SMEs, market experts, and professional services providers. We have created an extensive UK-ASEAN business network that links UK innovation and expertise with ASEAN's commercial developments. These are our partners. The top row are our corporate partners of the UK-ASEAN Business Council, and you can see there that we have some extremely strong partners there, not only strong here in the UK, but extremely strong and influential within the ASEAN region. Our colleagues from the British Chambers of Commerce and the British Business Group in Vietnam, and we're working, as I mentioned, across ASEAN governments. I do urge you to go and have a look on our digital platform, ukabc.org.uk, where there's a huge amount of information on ASEAN. We're providing publications about doing business in ASEAN, which you can download. We have all our events which are happening not just here in the UK, but also in the ASEAN region. And also what business export opportunities are available. These are live export opportunities that you can hook into and show your interest in those. So this is us. We're a small team, but very, very effective. We're based in London, in Millbank Tower there. For those of you who don't know where that is, just down, as you can see in the picture, from the Houses of Parliament, headed up by our Executive Director, Ross Hunter. And that's all from my side. So now what I'd like to do is to introduce James Quay from Asia Market Entry to talk about the region, the opportunities, and how they can assist companies into market. Over to you, James.
Hi, good morning, everyone. Thanks, Paul, for the quick introduction of myself. Just to elaborate a little further, I am James, as Paul has mentioned, the Senior Business Development Advisor for Asia Market Entry, based here in Singapore. I'm really focused within the company in the our partnerships team as well as the business development team. So prior to working here at Asia Market Entry, I was with Accenture, building up and implementing the national health systems here in Singapore, which is obviously very timely at the moment given the current ongoing virus situation. And of course, over the past 10 years for myself, I've been shuttling between Australia as well as Singapore. You know, I speak a couple of languages, including English, Mandarin, and Malay, which is a local language to this region. And I also like, before I start the presentation, I would just like to give a little short introduction about who Asia Market Entry is and what we actually do. So essentially, we are an outsourced business development team. We operate all around APAC, and our primary services is we help non-Asian technology firms, you know, non-Asian being companies from the US right up to Europe, Africa, as well as the Middle East, in helping them expand into Asia with a low-cost, low-risk option. So we provide services such as outsourced business development, localized marketing, as well as business matching and in-market representation. So that's essentially what we do here at Asia Market Entry. I'll be happy to definitely expand about that further after this session that I'm giving right now. So probably I'll just start right now with my presentation on ASEAN. So ASEAN really is at the heart and center of a dynamic APAC region. We are south of China, east of India, and north of Australia and New Zealand. So as you can see at the map here, it comprises of essentially 10 countries in ASEAN. And we form this bloc called the Association of Southeast Asian Nations, which is the 10-member regional bloc with a combined GDP of around 2.8 trillion US dollars, a population of about 640 to 650 million people, the third largest population in the world, and the landmass covering more than 1.7 million square miles. So this is pretty much, just to give you a sense of it, we are much 1.5 times bigger than India. And ASEAN was really formed on the basis of shared prosperity. ASEAN was formed in 1967, and its three main pillars is political security community, the economic community, as well as the social cultural community, of which I will just focus on the economic community in this presentation of mine. And over the years, ASEAN has undergone impressive turnaround in the last 5 decades. It used to be a region of turbulence and underdevelopment, and right now it's really a region of relative peace and economic success. And much of the credit really belongs to this close-knit community building efforts that ASEAN countries have been focusing on. So Just to expand a little further, this is ASEAN at a glance. You can see from the picture the 10 ASEAN countries, or the 10 countries that make up ASEAN. It is by 2030 it would be the 4th largest market after the EU, the US, and China. ASEAN has 12 official languages, with only one official language, which is English. So it's very surprising because English isn't native to any of the ASEAN countries, apart from probably Singapore, where I am. However, it is actually the only official language of ASEAN. It is also one of the largest labor forces in the world, falling only behind India and China. And the region is also home to an increasingly well-educated workforce, and most importantly, very, very young. 60% of our population in ASEAN is actually under 35 years old. And what that actually means is, with a young population, it's also home to the world's fastest growing internet market, because ASEAN has a predominantly mobile digital space, with a take-up rate of about 90% internet users in the entire region. And why is this very important? Because if you look around the rest of the world right now at this present day, you can see that Europe's aging, Japan's aging, even China is aging right now, but not Southeast Asia, not ASEAN, because so it's a very young and young, vibrant and dynamic place to be in at the moment. And from the economic perspective, it's also very viable, very feasible, and very looking really, really good. Why? Because ASEAN over the years have done up many different trade and economic partnerships and agreements with countries in and around the region. And the bloc from a 10-country or 10-member grouping has actually expanded and evolved over the years to, as you can see in the last point on my slide, from an ASEAN to an ASEAN +3 to an ASEAN +6 meaning Australia, New Zealand, India, China, the US. So this, the Japan and Korea. So that's actually, it has grown over the years to a very influential kind of alliance or grouping. However, one of the key stumbling blocks to ASEAN is really integration, because ASEAN, as I mentioned earlier, is comprises of a multitude of languages. That's just one of it. The other thing, or more importantly, is really the political, cultural, and economic differences in between the different ASEAN countries. I mean, if you look closely in ASEAN, the group is made up of 3 constitutional monarchies, 2 communist states, 3 republics, a sultanate, and a former military regime. And of course, that's Burma. So it's in terms of politics, in terms of the cultural and economic differences, it's really vast between the different states. So the key stumbling block really is integration. So what I'll do now is really just delve into the 10 ASEAN countries in detail. Hopefully I can do that in detail. If you have any questions, please feel free to raise them up or type them out in the message box over on your screen. So we'll start off with Brunei, the Sultanate of Brunei, which is on the island, the only independent country on the island of Borneo. It's a very oil rich and natural gas rich state, with a population of just under 500,000. As you can see in the table below, it's the currency. It's interchangeable between the Bruneian dollar as well as the Singapore dollar. So Singapore and Brunei are very close. We work together on multiple levels, and it's Brunei is traditionally heavily dependent on the oil and gas sector. It's expected to last for another 2 decades. And right now, what the government is really doing is working towards diversifying the economy by promoting private non-energy sector investments. It's also a member of the CPTPP. It's also a member of the various ASEAN FTAs, ASEAN Australia, ASEAN New Zealand, ASEAN India, ASEAN Korea, and ASEAN Japan agreements, which also provides foreign companies greater access to significant markets with these strategic agreements. So really, as Brunei is still really growing, it's still relatively quiet, but it's definitely growing, and it's a country to watch really over the next decade. And I mean, some important business factors to really consider: it's a stable government, it's a monarchy, it's low corruption, and really low tax rates. You know, it's there's no personal income tax, there's no manufacturing tax, export tax. There's no payroll tax. So it's really a high potential, high investment country in ASEAN to watch out for. Next, we move on to Indonesia. So Indonesia, I'm sure it's a country that a lot of people are over here are quite familiar with. Indonesia is a fast-growing economy, world's most populous Muslim country, and it's in terms of the industry sectors where the opportunities, the biggest opportunities lie really is the telecommunications, manufacturing, professional services, infrastructure, shipping, ports, and marine. Why shipping, ports, and marine? Because Indonesia is made up of many islands, and because of that, there is huge potential in this shipping, ports, and maritime industry. The other point that I'd like to just really touch on is the infrastructure industry. Why infrastructure and construction? It's because Indonesia has, I think, over the course of the last year, has just announced that they will be moving their capital of Jakarta onto the island of Borneo, where Brunei is actually at. So because of that, there are a lot of opportunities for infrastructure and construction, especially in the next 5 to 10 years. So this is something really to watch out for. However, there are obviously certain barriers, certain kind of obstacles in doing business in Indonesia. As you can see on the screen, there's medium level corruption. There's a certain degree of language barriers. Not everyone speaks English in Indonesia. The main language still is Bahasa Indonesia. So it's still very, I mean, people are still not predominantly speaking English. However, the younger generation in Indonesia would be able to speak English. Other factors to consider really is governance issues, red tapes, local representation, complex bureaucracy, and lastly really is social issues are also rampant in Indonesia, with occasional ethnic and religious tensions. I mean, one example I can give you is, I mean, recently Jakarta's former governor who's actually Christian was actually ousted mainly because of his religion. So because of that, it's a little bit complex, a little bit difficult, but nevertheless still a very promising market to invest in Indonesia. Next, we move on to Malaysia. So Malaysia is really also another very promising market to invest in. It's I would say mid to high developed economy, and the main opportunities really lie in the banking and finance industries, the manufacturing, professional services such as tax, audit, consulting, digital technology, IT, construction, and tourism. I mean, I think a misconception of Malaysia is that business opportunities are only present in Peninsular Malaysia. So for those of you who might not know, Malaysia is made up of Peninsular Malaysia as well as East Malaysia on the island of Borneo. So most often than not, whenever people mention about doing business in Malaysia, people only refer to those developed cities in Malaysia, such as Kuala Lumpur, its capital, Penang, and Johor, Johor Bahru. It's a couple of other cities within Malaysia. But Malaysia really comprised of 10 other states and 2 federal territories, which have been really, as up to now, are still relatively untapped and underdeveloped, which also brings about lots of opportunities for growth and business. Some important business factors to consider in Malaysia really is there is a low to medium level of corruption. Cultural challenges, as with many Asian countries, it's a very relationship-oriented market. Malaysia being a Muslim country, I think that there's Sharia law as well that we have to consider. Halal certification if you're in the F&B industry, but other regulatory challenges as well. And as well as the Bumiputra policy. So what is the Bumiputra policy? It's really that Malaysia gives priority to local agents in certain sectors within Malaysia, and it's really the locals that do have that edge over, whether it's in terms of jobs or in terms of winning government projects. So that's actually the Bumiputra policy. Other than that, it's a relatively easy market to enter. It's a low barriers to entry. It's very welcoming to foreign investment. And one of the most important points as well is that it's a member of the CPTPP, which also means that it gives out, it opens up lots of opportunities and doors to other international markets. Next, we move on to Myanmar. So Myanmar, or Burma, as we all know, it's an up and coming market as well, still relatively underdeveloped. It's recently military regime has actually stopped. And that actually brought out so many business opportunities in infrastructure, in construction, and in tourism. However, it's still very largely underdeveloped, and Myanmar's economy is still really based primarily on agriculture, as the country consists of an abundant fertile land and water resources. But I at least see that change in Myanmar right now, and there are many other sectors that are growing by leaps and bounds, and one of them is really construction, because the demand for example, high-rise apartments and buildings have grown because of Myanmar's bulging middle class. And as well as tourism as well. During the years ago, during the military regime, tourism was really restricted to just the cities. But now, ever since that has stopped, tourism is really prevalent in the country today, and it's really opening up to both foreigners in terms of tourism as well as business opportunities. Some important business factors to consider really is that the government is really supportive of foreign investment, as well as a low income tax, corporate income tax, and no VAT. However, that I guess is pretty much it for now. Apart from that, some things to watch out for really is that Myanmar still practices a dual currency system with its local currency, the kyat, as well as the US dollar. So in doing business there, you have to gauge which currency is better for you in doing business there, as well as perhaps employee attractiveness, because the local workforce there, although it's still really, really young, it's relatively, the majority of the workforce is unskilled, as well as there's a very low literacy in English, and because of that, it makes foreign businesses entering the Burmese market a little harder. Next, I'd like to talk about the Philippines. So the Philippines is also one of the biggest economies or markets within ASEAN. It's been growing over the last couple of years, and really, as you can see on the screen, these are the relevant or respective industries to really watch out for. Agriculture and fisheries, that's traditionally one of their strongest industries. Tourism and hospitality is another that's really emerging now. I think it was announced recently that there was around 6.6 million people or tourists that visited the country last year, and with an increase in the demand for of tourism within the country, the tourist sector is also growing as a result of that. The other thing to note really is BPO, which is business process outsourcing, whether it's in telemarketing, customer support, or IT. Most notably or significantly because the Filipinos, the locals, are known for their for the quality of their English. So they speak relatively good English, I would say. And that's a very precious asset to compete against other countries that are strong in the BPO sector, for example, India. And not forgetting that it's also very cheap labor in the Philippines. And also due to the time differences, a lot of foreign companies, especially the US-based companies, are very attracted to the Philippine workforce. Apart from that, you have construction as well as infrastructure. So under infrastructure, we have the Build economic program that was announced by the current Filipino president of really developing the infrastructure in the Philippines to meet not just global standards, but also to meet the kind of demand that the foreign companies are looking out for. Other important big business factors to consider is really that it's as I mentioned in the previous countries as well, it's a very relationship-oriented market. Largely still very Asian, so it's very focused on relationship building. But the other great stuff is it's a skilled workforce, and it's a workforce that most importantly is easily adaptable. I mean, Filipinos, majority of the Filipinos are actually working overseas out of the Philippines, and a lot of them are very successful, and that's really down or attributed to their high adaptability culture that is embedded in the Filipinos. So that is really something that you would like to consider as well. Next, we move on to Singapore, where I'm based. So Singapore, I'm sure most of you are familiar with Singapore. It's highly developed country, first-class economy, especially known for its banking and finance industry, professionals and professional services, as well as education and medical. Even as of now, the digital technology and the IT market is also growing. Singapore has been identified as one of 3 or 4 smart nations in the world. Smart nations being the entire country is digitalized. As I mentioned earlier, a couple of years ago, I was helping Singapore build up its digital health systems, and now the entire country has been digitalized in the health sector at least, and it's constantly always upgrading. If you come to Singapore, it's always building new infrastructure and buildings, and it's a really highly developed economy. And if you want to look at ASEAN business opportunities, setting up a shop in Singapore first is really ideal, because from Singapore it's really easier to maneuver, as well as to tap into the reservoir of knowledge, skills, and experience of the local workforce and the relevant business councils to help you. So the local business councils here give grants to foreign companies thinking of setting up shop in Singapore. The local workforce here is not only highly proficient in English, there's no language barrier, it's also very, very skilled. 99% of the workforce here, we are educated to at least college level. Singapore is known for little or no corruption. It's also known for the ease of doing business within the country. And also what's really important for foreign businesses is Singapore has a very strong legal framework very established, very reliable, and also we have a network of free trade agreements with multiple countries, including the US, which also opens up many opportunities in multiple markets. So that is really another factor, or important factor to consider if you would like to set up shop in Singapore. We move on to Thailand, where really it's also one of the most developed economies within the region. Aviation, e-commerce, digital technology, tourism, and hospitality, as well as agriculture industries. Some important business factors really to consider is the pro-business environment. It's really pro-business, welcoming to foreign businesses. However, it's sometimes politically unstable. Thailand has gone through 12 military coups, which obviously puts a dent on doing investments within the country. Other factors includes the importance of the Thai language as well. So many business application forms will need to be completed in Thai and not English, which means elements such as your company name or your brand definition has to be changed to has to be in line with the Thai language. But unfortunately, the Thai language is really hard to learn. It's not that easy to understand. So it's always good to, if you have a local partner on the ground in the country, to really help you out doing business within Thailand. Next, we move on to Vietnam. So Vietnam is also it's a developing economy which looks really promising. It's one of the countries I look out for personally myself, mainly because it's first and foremost prime geographic location. It's facing one of the world's busiest shipping lanes in the South China Sea. It's also close proximity to China, meaning to say that it does benefits from China, does naturally spill over to Vietnam as well. And Vietnam has really been one of the main beneficiaries of China's boom. And also Vietnamese peoples has this cultural inclination for work and entrepreneurship that has really revived its economy, especially after the Vietnam War. Traditionally, it's really strong in the agricultural industry. It's heavily reliant on agriculture for rice, coffee, rubber, but also its ICT, its digital technology sector is also booming. I think in 2018, revenue was estimated to be about $60 billion in revenue, and Vietnam has also within ASEAN has one of the world's youngest population, as I mentioned, and because of that, propagation of the internet or take-up rate is really high. It has a very active digital economy. Vietnam has about 96 million people, and out of 96 million people, about 65 million people are connected to the internet. So because of that, Vietnam's IT sector is really currently experiencing high growth, and also driven by low cost and high quality labor. As you can see on the slides here, it's politically stable. It has low corporate taxes. It's also a member of the CPTPP, which opens up many opportunities abroad as well. And it also has an FTA in place with the European Union. Of course, like many other countries within ASEAN, you have to be careful in terms of bribery and corruption. There's still the existence of corruption, but apart from that, it's really a promising market to enter. The other country I'd like to move on to is Laos. So Laos is still a relatively underdeveloped country. It's the only landlocked country within ASEAN, still heavily reliant on agriculture, but due to China's kind of support, construction and tourism has boomed as well. I think right now in Laos, the main infrastructural project is actually the high-speed rail that's connecting Vientiane, its Laos capital, to the city of Kunming in southern China. So a lot of people, locals, are employed in that job, which also has helped develop its economy and lifted a lot of people out of poverty. Unfortunately, there's still a high prevalence of corruption within Laos, and it's a lack of skilled workforce, and people rarely speak English within the country. Many inefficiencies still exist within the country as well, whether it's business processes or frameworks, legal frameworks and stuff. But it's definitely a country to watch out for in the years to come. Main reason is because Laos underwent reforms called the New Economic Mechanism that actually decentralized government control and encourage private enterprises along state-owned enterprises. So the government in Laos really is encouraging more foreign private enterprises to enter the country and to work together with state-owned enterprises. Last but not least, it's the country of Cambodia. The country of Cambodia within ASEAN. So one of the most promising industries within the country is really the manufacturing sector, which has accounted for about 31% of Cambodia's economy, and its country's growth rate for value added in the industry is really the highest in Southeast Asia. And the Asian Development Bank has forecasted that the country's manufacturing industry is going to grow continually to around 9.8–10%. And Cambodia is really became I think in 2018 it became the EU's #1 supplier of bicycles as well as garments. So it's one of the manufacturing industry really is a key engine of growth for the country, and providing about almost 1 million jobs for Cambodians, for local Cambodians. The other main industries is really in construction and gambling because of China's influence in the country as well. So China is helping the country build, casinos and buildings. The construction industry within Cambodia has grown to an average of about 11% year on year. So that's something quite significant. And as well as its tourism and hospitality industry, which is growing quite a bit. However, it's still, like Laos, it's still prevalence of corruption, inadequate infrastructure, as well as currency risk. So like Laos and like Burma, Myanmar, the US dollar as well as the local currency, the Cambodian riel, it's still being used together, and because of that makes the fluctuations a bit currency fluctuations a little bit unreliable in that sense. However, Cambodia has a young workforce and has very cheap labor, although unskilled. But it does have a pro-business government, as well as trade integration is also increasing within ASEAN, fellow ASEAN countries, as well as out of ASEAN with Australia, New Zealand, and the US. So really, I think in summary, before I pass this off to Victor, just wanted to say that companies, foreign companies, European companies, British companies, you need to be aware of the intra-regional differences and sensitivities, cultural sensitivities, political sensitivities, and all that. Within ASEAN, many many festivals are celebrated over here. Right now, we have the Ramadan. Apart from Ramadan, you have the Chinese New Year, Diwali, and so on and so forth. So really, the key here for growth in ASEAN is if you are able to successfully appreciate the diversity and as well as the complexity of the region. As I mentioned earlier, there's no one common language that binds ASEAN together. English is spoken, yes, but it's really only mostly understood in the urbanized areas of ASEAN. So customization and localization is key. Companies or foreign companies really need to learn that, in stuff like product labeling, promotional and marketing materials, business etiquette, and all that, it has to be very localized, and you really have to understand acutely the different sensitivities within ASEAN. The other thing is also nearshoring, to embrace nearshoring. Why? Because gone are the days of viewing ASEAN markets as a geographical extension, to your brands that were once selling in the developed world. So what people usually do is, they just copy and paste whatever they are successful in, whether it's in Europe or America, into ASEAN. That cannot happen now. Those gone are those days. So really, what you really have to do is set up a main office within ASEAN. A lot of companies are setting up R&D centers, training institutes that offer products and services that are really specifically developed for the ASEAN consumer, the average ASEAN consumer. And the main reason really is because as I mentioned, it's a hugely young population within ASEAN, where people or the local population within ASEAN really understand how e-commerce works in that sense. So really, because of that boom in that digital B2C markets, internet penetration is also really, really high. So because of that, the customers' willingness to pay for convenience for different kinds of services are also really high, because largely due to ASEAN having a lack of facing a couple of infrastructural challenges as well. So because of that, there is that willingness to pay for convenience. So because of that, the demand for a digitalized ASEAN market is also there. So I think with that, I would just pass it off to Victor to continue this webinar.
Thank you very much, James. Thank you for that really informative insight. I would say snapshots to those countries and the opportunities that are available to UK companies. Just to remind our attendees, if you do have any questions for our panel, please send them through to us on the question box, which is in the right-hand bottom lower corner of the webinar dashboard. So without further ado, we'll go over to Victor Kayosev, who's the Chief Operating Officer in Greenhouse, to tell us a little bit more about the ASEAN region.
Sure. So first of all, thank you very much for the opportunity, Paul and Veronica, to speak today. And thank you, James, for the comprehensive overview. I think that makes my job much easier, because now people have pretty decent understanding of the region. And I'll try to provide a complementary yet different information about Southeast Asia and what are our observations. But before I start, just a moment. Yeah. So before I start, let me tell you just a bit about myself and then a bit about Greenhouse. So my name is Victor. I'm actually born in Bulgaria, but I spent the past 10 years abroad of Bulgaria. I'm educated in Denmark and spent quite a bit of time traveling and running companies across Europe and Asia. For the past 4 years, I've been based in Indonesia, but I often travel to Singapore because Greenhouse is actually a Singaporean-based startup. I'm the CEO at Greenhouse, and I look after the day-to-day operations, especially with focus on business development and revenue generation. I have a degree, master's degree in new venture creation, which is essentially entrepreneurship, and I blog on a site mainly related to startups, technology, and emerging markets. So a bit about Greenhouse. Why we started the company, it's because starting a business in emerging market is very different than starting a business in Europe. I remember back when I used to live in Denmark, starting a business in Denmark, it literally takes a couple of minutes. You can log in online and you pay just a symbolic amount, and then the business is up. Versus, in Southeast Asia, I'm going to show some data that shows you how long it can take, even if you have a partner. And if you don't have a partner, I have seen cases where just getting your papers ready can take up to 1 year. So that's the reason why we started Greenhouse. And Greenhouse essentially is a technology platform providing professional services to our network of service providers to companies entering Southeast Asia. So our product looks like that. If you land on our website, you're able to see that we are actually a marketplace where you can compare and see different professional service providers with regards to how many years they've been in business, how many customers they have, what kind of customers they have as well, right? A lot of testimonials are listed there as well, reviews, services, prices. So we bring transparency to a space that was never transparent before. the kind of services that we offer are, I mean, all we know we offer about 40 services, but these are the most popular ones that foreign businesses would source to our platform. So looking at business incorporation, corporate secretarial, work permits, so all kinds of business visa, tax filing, payroll, director services, accounting, bank account opening, and registering a business address, or also known as a virtual office. A bit about Greenhouse, looking at the numbers. So our network of service providers have collectively helped nearly 50,000 businesses to enter this part of the world. We have more than 70 service providers across 8 countries in the region. And as I mentioned in the previous slide, we have about 40 services, 40 different professional services. Our NPS score is 71, and NPS stands for the Net Promoter Score. And essentially, that's how many companies measure the satisfaction of their clients. The higher the score, the better the service, the higher the satisfaction. And just for comparison purposes, in the B2B space, especially when it comes to professional services, the average NPS is 25. So we spend a lot of time training our team and creating features that create pleasant and good experiences for our clients. Additionally, we have more than 20 partners, and the difference between partners and service providers is that partners are essentially venture capital companies, accelerators, incubators, government bodies, and even recruiters across the region. And the way it works is that, the way our process works is that you land on our platform, you can either choose in your own service provider that you feel it's a good fit for your needs, or you can ask our help and then we can guide you. The moment you find a service provider in the market where you're interested, or perhaps in multiple markets, then you're going to discuss with these service providers what you need, because in most cases companies don't know what they don't know. The market each market is very different one from another, and there is a lot of compliance sessions that are taking place before you actually start incorporating and entering the market. So then the service provider is going to guide you, and then we take the payment and kickstart the paperwork. So yeah, a bit about Southeast Asia. I think as it was mentioned by James already, and Paul touched a bit on that, the market is very interesting. Yeah, you see, it's very diverse. I'm going to go a bit deeper into that, but just from this slide, you can see that the population has been growing. The internet users have been growing with about 30% year over year, and mobile users as well. So a lot of people like to say that Southeast Asia is mobile first or even mobile only market. So it's very important for your strategy whenever you're entering this market to really reconsider how you'd like to penetrate and what would you like to optimize, whether it's your desktop web product versus your mobile product. Moving to the next slide. So here we're looking at the Southeast Asia internet economy. So this is a great study done by Google and a few other companies that is released actually every year, and this is data from the latest year. So what we can see here is that actually the internet economy, which stands for any kind of business that actually deals with digital services or internet, has been growing quite a bit. So we're looking at 33% compounded annual growth rate, and it's expected to reach $300 billion by 2025. And I'm going to speak mainly about the internet economy because most of our clients are actually startups, tech companies that are entering the market, and this is where we actually have most visibility of what's happening and where our expertise lies. That's another slide that kind of illustrates the internet economy growth versus the GDP. So you can see how we have marked Indonesia and Vietnam in different colors because that really shows their growth and how they're actually becoming very interesting markets when it comes to internet economy. All the markets are growing, but these are the markets that have seen the biggest growth. And you can also see how that compares to markets like the US or China. That's another slide that breaks it down country by country, and you can actually see the Southeast Asia internet economy, how it's been growing until now, and how it is expected to grow country by country. So you can see that Indonesia stands out, and Indonesia is definitely a very exciting market and where we see most incorporations taking place, perhaps after Singapore. Because Singapore is very strategic, as James was talking about it. Singapore is the kind of market where you would go first, you would try to build some kind of local headquarter, you try to understand what's going on in the region, and only then you're going to venture in other markets. But we see more and more companies actually going directly to markets like Indonesia, Thailand, or Philippines, depending on what they're offering and how attractive this market is for them. I mentioned a bit about Singapore, and I think what makes Singapore very exciting, especially from internet economy point of view, is, I mean, this survey that I'm presenting here on the screen is very recent. It's actually developed by KPMG. It's called Technology Industry and Innovation Survey. So it's actually from 2020, and it essentially maps countries and cities outside Silicon Valley to show how attractive they are from internet economy point of view and for running a startup. So you see that actually Singapore ranks as #1, which is very impressive because the survey looks into a number of criteria such as the level of talent, education, universities, as well as how much resources are available. So what kind of government grants exist, how difficult it is to start a business, how much venture capital is present in this market. So Singapore is definitely spearheading Southeast Asia when it comes down to that. And I think the next interesting topic is how has the funding in Southeast Asia been growing. And why I'm bringing this is because we see more and more businesses that the way they enter the market is that they are looking for strategic investors because Southeast Asia is very relationship focused part of the world. And because of that, you're going to need to have a very well-established network. And it's nearly impossible to have such a network when you come from far away. And not everyone has the necessary resources to take really long time to establish this network. So often what startups do is that they would approach VCs based in Indonesia, Vietnam, Singapore, or any other market. And in that way, fundraise at least one round here, or at least have some investors in this part of the world that can help them grow. So you see how the funding has been growing. So we're looking at US in billions of dollars. So this is the most recent data. Of course, we're going to see a bit of decline because of COVID, but I still see quite a few startups receiving funding despite everything happening. And this is an indicator that essentially shows you how the funding has been growing in ticket size. So for those of you that are not familiar with the terminology, in the startup world, we have something called seed, Series A, Series B, which essentially maps how early is the startup. So if it's seed, it means that most probably this is the very first investment that the startup is receiving. A Series A would be the second, unless there is a pre-Series A round, which is a thing nowadays. And then you have Series B, C, D, etc. So you see how in every phase, in 2016, we have seen like relatively small amounts that have been invested, and these amounts are growing. And we expect that this amount is going to continue growing in the upcoming years. What you need to be aware, though, is if you reach a certain stage, if you're already like post-Series A, perhaps it would be challenging for you to fundraise in the region, because this chart here illustrates how many companies exist for each phase. So you see that when it comes to seed-based investment, in Southeast Asia, we're looking at more than 200 companies. Between A and B, Series A and B, you're looking at more than 20 companies, and I think even more since this data was actually introduced. But when you look at Series C and D, it's very few. So there is a gap in the market. You need to be mindful of that, because it's going to be challenging to fundraise money in this part of the world if you're already that advanced. But then again, the moment it gets really big, now you see that again, there's coming more and more services. So the region already is a home of what again is known in the startup world as unicorns, which are startups that have valuation of more than $1 billion. And there is a bunch across the region. I think Indonesia is looking at 4 or 5. Singapore is having quite a few as well. And any other market like Vietnam or Philippines is already releasing their first unicorns as well. I think that's so the World Bank runs a study annually, which is called the Ease of Doing Business, where they try to map the entire world and point at how easy it is to do business in different markets. And that looks at a variety of components. And the lower the number, the easier it is to do business. So you see how Singapore is essentially the second in the entire world. But then when you look at other markets, like you see that Philippines has been standing at 95 for quite a long time. So the government hasn't been really able to simplify the process of starting a business there. Indonesia has been doing a really good job, and you see that although it's 73 and may sound like a lot, it used to be much higher. So getting there. Vietnam as well has been investing a lot of efforts to make it very friendly and easy to enter, even though there is, I would say that Vietnam is probably the market with the most options for company formation among all of them. Thailand, pretty easy despite the language barriers that James was talking about. And they're pretty strict when it comes to a lot of rules when you're establishing a business there, but despite that, it's pretty straightforward. Then you have Malaysia, which, if I may say, Malaysia stands somewhere between Singapore and Indonesia of ease of doing business, more towards Singapore. So very similar markets, and Malaysia is becoming more and more developed, and you can see that just by looking at this index. And another chart I wanted to show that I believe is very relevant nowadays is how Southeast Asia is facing recessions. We're looking at a recession today, and I just wanted to compare with how Southeast Asia dealt in the past with similar conditions. So you can see during the dot-com crash that actually the growth that Southeast Asia experienced is considerably higher than other parts of the world. The same happened in the next recession that we experienced, and then again during the Eurozone crisis. So typically Southeast Asia does better. And why I think that's happening is because a lot of companies tend to outsource. So the moment they start facing a lot of challenges in their home markets, they would reach out to markets that have a less expensive labor, and they would try to outsource as much as they can. So often Southeast Asia would grow despite the fact that other more developed parts of the world are not growing as fast. And just another slide that really gives you an overview of how difficult it is to run business and how expensive it is to incorporate in different markets. So on this slide, I'm looking at Singapore, Indonesia, Vietnam, and Philippines. And at the top, you can see how long it takes to incorporate on average across each of these markets. So you can see that in Singapore, in my experience, more often than not, it takes about a couple of hours as long as all papers are submitted. So it's very fast, very efficient market. Then you look at Indonesia, that used to be 2 to 3 months. Recently, the government introduced a system called OSS. So they're trying to digitalize the experience. But again, because there is multiple government bodies involved in the paperwork, it still takes about a month to month and a half. Then looking at Vietnam, which is in a similar condition in Philippines being a bit harder. Then again, looking at costs, you can incorporate on your own, and it's going to be relatively inexpensive, but it's going to be very difficult because not every market speaks English, and because of that, it's going to be very hard for you to find the necessary paperwork. In the case of Indonesia, for example, there is 4 government bodies looking after your incorporation, so it's going to be very painful for you to do it on your own. And as a result, you're going to need to hire a service provider, and that's what we help with, right? We're going to help you to find one. And the prices vary. I've seen all kinds of prices ranging from $2,000 all the way to $10,000. But I think on average, these are the numbers that you're looking. So Singapore, again, relatively inexpensive, and then you see how the price is changing. I have added here also work permit costs, because often as you're incorporating, you're the one spearheading that, and you're going to need to have permit to go into the market, sign documents, meet with partners, establish your office, establish your operation. So because of that, you're going to need to get some kind of work permit. And then you can also see how the ease of doing business that I showed in the previous slide compares in these markets. The same information for the other 4 markets where we operate: Hong Kong, Malaysia, Thailand, and Myanmar. Again, Hong Kong, very similar markets to Singapore. You can see that with regards to ease of doing business is again, just behind Singapore, very fast, very efficient, relatively inexpensive to start. Malaysia, again, pretty efficient. Thailand, it depends on what kind of company formation you're going to have, but again, pretty decent. And Myanmar, I guess, it's the hardest, especially look at the ease of doing business index. It would be the hardest market to enter, and it can be pretty expensive. So yeah, that's all that I prepared. So thank you very much, and I hope that was useful. And you're more than, I'm going to be more than happy to answer your questions either now or at a later point.
Thank you, Victor and James, for that. Thank you very, very much. We have run over a little bit, but we do have a few questions coming in, and I don't mind taking a few more minutes to answer those, because I think they'll be really important for our attendees who are listening at the moment. One thing that we and I briefly mentioned at the beginning of the presentation was the COVID situation. I think we should probably get a statement from both of you regarding how you see the region coming back after post-COVID. James, would you like to kick off on that one? Just need to unmute James.
Hi. Sorry, are you great? Sorry, just a little bit of an issue. Yeah, I mean, just quickly answering your question, Paul, on post-COVID. I think even until now, in that sense, still during the current situation, ASEAN has always been open for business. It will always be open for business. Yes, there are certain impacts or that has affected the relevant economies within ASEAN, but I think it's only going to ASEAN is going to rebound much better and stronger post-COVID, and namely because of its really young workforce. Not only a young workforce, as I mentioned, but a very technologically savvy workforce, and really because of that, it's really something that I do foresee ASEAN really rebounding quite fast, because I think the population here, it's very adaptable, highly adaptable, as well as resilient, even in times of crisis such as this.
And Victor, if you'd just like to add to that, and what sectors, what industries you may see will grow the highest post-pandemic?
Sure. I agree with what James is saying. In fact, we do see a lot of interest even nowadays. A lot of companies are still interested. They're just a bit more careful in the way they enter markets. I guess in situations like this, companies like Asia Market Entry are very helpful because they can really help you to validate the market before you enter. And we see more and more interest in this kind of services, where rather than opening an office in a market in Southeast Asia, what companies do is that they either spend more time researching and understanding the user behavior in this market, what's happening, what are the trends, or hiring someone to help them with some validation. So the interest is still here. Companies are still doing that. It's just they're a bit more careful. And to answer your second question about what industries are doing well, well, e-commerce is exploding, right? And my entire presentation was around internet economy. And many of these internet-based businesses, they're not that impacted, right? Because things are happening online, and because of that, they're not that. I mean, for instance, let's take an example of Indonesia. Indonesia has companies like Tokopedia, which is a marketplace, e-commerce marketplace, and right now it's just on fire. Because people are essentially ordering everything, like their groceries from there. All kinds of things that they need, and many of these businesses are coming to the rescue. So a lot of startups, a lot of digital companies are doing well. So all kinds of SaaS products, all kinds of e-commerce products, all kinds of health tech companies are doing very well. We see a lot of them expanding, trying to ride the wave and gain more market share, taking advantage of the situation.
Oh, that's brilliant. Thank you very much. I think it was important just to cover a couple of questions that we have there. We do have a few more, guys. We have run out of time, but just wanted to let everybody know who has sent a question in that we will definitely get back to you with an answer on that one. So I just wanted to really thank our speakers, James and Victor, for a very informative overview of ASEAN and the potential there for UK exporters. So thank you very much, and thank you very much for all the attendees. We hope that's been useful and informative for you. And obviously, see that this is a region which is really, really dynamic, and is probably your next area for expansion of your international business. I just wanted to bring to everybody's attention that we do have another export series webinar on the 19th of May. It's in the education sector. It is the technical and vocational education training, TVET, and we are doing that with a couple of our colleagues from the Department for International Trade and one of our colleagues, Anna Yeroshina, who is a director for international engagement at Pearson. So please get that in your diary. It is open for registrations. And finally, the webinar has been recorded. We will be sending out a link very, very shortly. It'll be up on our Go to Stage platform, along with all our other webinars that we have done in the past and some additional information about various other events that are happening. So thank you very much, everybody, and we look forward to seeing you on the 19th of May. Goodbye.
Thank you.
Thank you.